All right. Well, happy Friday, everyone. It is May 22nd, and we've made it to the second half of May. How about that?
We're still here.
We're still here. I can't believe this is our 9th webinar now. We started this thing back in March, and I don't think at that time, sure didn't think that we'd still be where we are right now. So anyway, thank you all for being here. It's great to have you all with us again. You know us, or you should know us by now. My name's Ed Earl, and I'm coming to you from San Diego, where I run a construction management company, and I'm also a business coach for contractors with the two other gentlemen that are here on the call with me. So, Paul, why don't you introduce yourself?
What happened to your MBA from Stanford thing? You know, I'm disappointed.
Oh yeah, I dropped that. Yeah,
I think he's a little embarrassed because he hasn't done it. You know, he's a little embarrassed compared to the other two of us, Paul. So
I guess my master's is from Cal Poly. Yeah, right.
He's laying low.
Just a comment this week. I was reading some articles, and things seem to be, you know, housing sales are up, and a bunch of other things are positive. All our clients are really doing well. So, I mean, it was probably one of the best weeks we've had in a long time. We talked to like 30, 40 people a week. So it was a really positive week for all of our clients, which is exciting. So, yeah.
Well, and I'm still working on my MBA. There's no end date. So I maybe should have gone to Stanford instead. It's a little late for that at this point, but at any rate, what you just said, Paul, is true. I've been surprised by it, how robust most of the companies we speak to, how well they're doing. Work hasn't gone away, and clients want the work. And if we can do this in a safe, proactive fashion, introduce some of these virtual tools, we're really seeing an opportunity to lead in each of our markets. So let me give it back to you, because interesting developments with the Paycheck Protection Program, isn't there?
Yeah. Well, that is the big news. Probably right about the time we were doing our webinar last week, the SBA finally dropped the bomb, and they released their Paycheck Protection Plan Forgiveness Agreement. And so that's going to be our main focus of our webinar today. But of course, I got to always start with my little joke for the week. So here's my pandemic humor for the week. The coronavirus has turned the world upside down. Old folks are sneaking out of the house, and their kids are yelling at them to stay indoors. So how's that for a change, right?
So I have this certain thing that says time for payback, right?
Yes, time for payback. So, all right, another one of our weekly traditions here checking in. Good news here is that nothing has changed. 2 weeks now, and there's been no changes. So, and even though it's showing New York is being closed to construction, we do now know that upstate New York is open, and they are starting to do construction in certain areas. So, and as I'm sure we are all aware, all of the states now are in various stages of reopening. I know here in California, they've started this weekend now. Restaurants can start having indoor seating. And so when they're talking about maybe even opening up some of the barbershops and things next week. So that is all good news.
As an aside, I was trying to get a hotel in Sedona, and they're all booked, right?
Wow.
Wow. It's like, wow, you know, that's amazing. Memorial Day weekend, you can't find a hotel. It's like good old days.
Wow. Jeez. Yeah, that's good. All right. Well, let's see a show of hands here. Anyone get funded this week for the PPP program? Let's start with the question of this week. Anyone get funded this week? I'm guessing. Oh, wow. John did. There we go. Oh, okay.
And you know, and I got a note. I got a follow-up note today, Ed, where from one of the lenders saying there is money still available. And so I will take it at face value.
All right. So, okay, so we did what looks like so there is still money coming in. That's good. And then let's see a show of hands. How many of you have gotten money so far, the PPP money? And I'm assuming that's going to be most of you. Yep. All right. Well, then you definitely, oh, wow, look at that. Pretty much almost everyone on this call has gotten money, which, you know what? I have to commend you guys, because this is not the rule. I think in many industries and many places, It's maybe 20, 30% of people have gotten the loans, but the fact that so many, the vast majority of you have applied and gotten your PPP loans, that speaks very highly of you. You guys are definitely in the top, you know, whatever, 20 or 30% of small businesses that have taken advantage of this program. So, all right, so here it is. The PPP Loan Forgiveness Application has been released. It's an 11-page form, which doesn't sound that bad, but as we go through it here, you're going to find out that it's a little more.
I love your estimated time to complete, 180 minutes.
Right. Well, it's just like any other form from the IRS. You know, at the bottom, it says estimated time to complete this form, and that's what they say is 180 minutes. Now,
wow.
I think it could take a lot longer than that. I think they've kind of underestimated that. But if you haven't yet, you can download the PPP application, forgiveness application form with that link, and then you can see you'll get to the Paycheck Protection Program Plan forgiveness application, and you just click on download. And once you get it, as I said, it's 11 pages, but it's only 2 pages of applications, and then 2 pages of schedules, and 7 pages of instructions. So that's where the challenge lies. The heart of the forgiveness application is basically these 11 lines. So, which again seems simple when you start. And the first time I looked at this, I said, oh God, they've made this really simple. This is awesome. We just have to fill out these 11 lines. But the challenge is that there's a lot that goes into these 11 lines. For example, the number 1, payroll costs, you have to fill out this Schedule A before you can even fill out line 1. So while this is line 1 of 11, the first line requires you to fill out 8 other lines on another schedule. So it is much more complicated. But the good news is that we finally have some clarification on many of the questions that we all had about the calculation of the forgiveness. So the loan application form has really clarified previous questions in 4 main areas that I want to cover today. The first is in the covered periods, what's actually covered in the PPP. The FTE definitions. FTE stands for full-time equivalents. The third is the area of the safe harbor, and the fourth is the documentation requirement. So let's just jump right in. So some really good news on the covered periods. You know, we've been saying that you were stuck with the 8 weeks from when your loan was actually dispersed. And they realized that if you're on a weekly or a bi-weekly disbursement, that can cause you problems because you could have a gap there and a certain amount of your payroll wouldn't be covered. So they created this thing now, they're calling it the Alternative Payroll Covered Period, and the APCP for short. And what that does is it actually allows you to elect a different pay period than when you get funded. You can actually start your pay period on the first day of your pay cycle that occurred after you got funded. So, and also it's good to know too that costs incurred but not paid during the 8-week period are included if they're on the next scheduled pay period, right? So even if, let's say, your pay period ends in the middle of the week, whatever that following pay period is will cover in that same 8-week period. So let me give you an example of how this alternative payroll covered period works. So let's say you got funded on April 4th and you pay biweekly. So if you got funded, your 8-week cover period would be April 20th through June 15th. But let's say your first pay period isn't, you get paid on Friday. So your first pay period would actually be April 26th. So you can actually cover your alternative payroll cover period would start on April 26th and extend out to June 21st. So this is really huge for any of you that are doing weekly or bi-weekly pay periods, because now you've got more flexibility in when that 8-week period starts. All right. So that's the first thing. Let's talk about FTEs. So FTEs are full-time equivalents. So this is where you're calculating. I had one of our clients text us this morning. I don't know if Mike's on the call, but Mike said, "Hey, what do we do if we had an employee that didn't work for a certain period of time, 30% of the time, and then we later brought him back? Are they going to be concerned about each employee?" No, they are not going to take a list of, "Hey, give us the names of all the employees that you started with at the beginning of your period and give us the names at the end." They're just looking at full-time equivalents. So as long as your full-time equivalents are the same, then you are okay. However, they've also allowed some exemptions for the full-time equivalents, and these are really important. If you fired someone for cause, you don't have to replace that position. If they voluntarily resign, I know some people have just decided, look, I've had it, I'm done. If they voluntarily resign, then you are exempt from having to bring them back for that full-time equivalent. And the last one is if they voluntarily requested and received a reduction of hours, which I think was Mike's case, where they decided they only wanted to work 30% of the time, maybe because they had daycare issues and children at home and things like that. So if you've had any of those three issues, you are actually exempt from having to get back to the full-time equivalents for your levels. There's also this concept of safe harbor, which is a term that maybe some of you may not be familiar with. The idea of a safe harbor is that it gives you protection from being disqualified. So if you meet certain items, even if it's not to the letter of the law, you're considered to be in this safe harbor. And so that's what this FTE safe harbor is. Yes.
I have a question. I assume that none of this is need-based. So you don't have to prove you needed the money or your business was damaged in any way by COVID?
Correct. So they actually do, in the forgiveness form, they do ask you to certify that. But my contention is every single person in the country, let alone everyone on this call, has been impacted in some way. Now, it doesn't mean that you would have gone out of business without this funding, but somehow, some way, this pandemic has affected your business.
So you don't have to prove it. There's a question that says, I certify that my business has been negatively affected by the COVID thing. Yes. Correct. You don't have to get into any details, right? Okay.
Exactly. And they've also made an announcement last week that if you borrowed less than $2 million, they won't scrutinize that. So if you borrowed more than $2 million, then they will actually be subject to scrutiny, and they could come in and say, hey, you need to prove that you really needed this money in order.
So David, we should have raise of hands that got over 2 million, right? I don't think we have any hands go up, right?
Yeah, anyone got over 2 million? Judy's raising her hand. Really, Judy? Did you really get over 2 million? Oh, she took her hand down. Okay.
Okay.
All right. So let's.
I see no hands whatsoever.
There we go. Okay.
Right. Okay. So let's talk about this wage reduction safe harbor. So the first thing that you do is you determine if your pay was reduced by more than 25%. And that's by I didn't really cover it, but there's this covered period, right? Which is your 8-week period. We talked about that versus your first quarter of 2020. So if you had less than a 25% reduction in pay, you're good to go. There's no reduction in the loan forgiveness. You don't have to calculate anything else. You're good to go. If instead you had more than a 25% reduction in pay, it doesn't mean that your portion of your loan will be disqualified. It just means that you have to go on to step 2. So now in step 2, we determine whether your safe harbor has been met or not. And how you determine that is you say, well, what was your average salary and wages between February 15th and April 26th? And if that was greater or equal to what you were paying on February 15th, then you've met the safe harbor. So hopefully you're kind of getting the idea here that they're not going to be looking at specifics of this employee versus that employee or this pay period versus that pay period. If you've met that over average salary, then you're good. If you haven't, then you go to the next step, which is you determine if your average annual salary or hourly wages as of June 30th is greater than or equal to February 15th. Again, if yes, then your safe harbor has been met. If no, then you proceed to step 3. And step 3 is where you actually have to calculate the loan forgiveness reduction. So this is where maybe a portion of your funds is not going to be forgiven. And is that going to be 5%, 10%? And that's where you start to go through this whole calculation forms, which I'm not going to go through here because it's way too complicated for what we're trying to do.
I've got a couple good questions. Can we try to address? We always get some creative questions.
Yeah.
First one from Bill, which is interesting enough. We had an employee pass away, but not due to COVID. How does that affect our headcount?
That's a great question. I got to think that in this same area here where we're talking about fired for cause or voluntarily resigned, I think right. I think involuntary death is probably about the same as voluntarily resigning.
Okay.
So,
I like the comparison. All right. So let's go to the next one. If we've had some of our workers back in the first 4 weeks after the funding and the full number back by the end of the 8 weeks, does that count as fulfilling the requirement?
My understanding is that it does.
Okay.
It does. Yeah. I think you would
still
be
have
within
to
that same.
Right, but the numbers still have to work. You have to have paid out that money, right? You're not going to get reimbursed for anything you didn't pay out.
Correct. Right. But as long as you paid the money out, like you said, Paul, I think you would fall within that safe harbor. So, all right. Anything else? Okay. So let me move on to the fourth.
Yeah.
Go ahead.
Keep going. I'm sorry.
Okay. So let me move on now to the fourth area, which is, no one was really clear on what kinds of documentation you'd need to submit. So now it's pretty clear that what you have to submit is the PPP Loan Forgiveness Calculation form. That's that 2-page form that I showed you at the beginning. And then you have to submit the PPP Schedule A, which is the additional Schedule A. And then you have to submit your payroll documents, which is, quarterly tax filings, unemployment tax filings, any account statements that you have. Hopefully, if you've got a payroll service, ADP, paychecks, you would submit that as well. And then you also have to submit the full-time equivalent documentation for how you're calculating your full-time equivalents. So those are the 4 pieces of information that you have to submit with your packet. Let me mention this as well. This was something I actually got off another webinar that I attended this week. I sat through an hour-long webinar and I've read probably 6 or 7 articles on this whole PPP loan forgiveness form, and I'm still far from an expert. It's pretty complicated. But basically what they said here is that it's important to realize that you want to save all of this information for 6 years. So this is information that you don't need to submit. The previous page, let me go back. So this page is the 4 things that you need to submit, right? So these are the 4 parts you need to submit. This is information that you need to have. You don't need to submit it, but you need to keep it for 6 years, just in case if you were ever to get audited by the IRS or whatever. So it's your Schedule A worksheet, the documentation supporting your individual employee wages. This is really important. Any kind of documentation regarding employee job offers and declining. Remember when I talked about the safe harbor, if they voluntarily resigned or if they voluntarily took a reduction in their hours, or in the case of the deceased employee having some documentation of that. Save all of that documentation. Keep that in your PPP loan file. Again, you don't need to submit it, but keep all of that documentation in a folder and keep that for 6 years. I would suggest actually scanning it all and putting it all. I'm a big on paperless office. Don't just rely on having it in a folder and some place along the way it could get lost. So All right.
Another question. If I had an employee work 30% less time last year, can I pay him full time with the PPP money this year? I mean, that to me equates to bonuses, something along those lines.
Mm-hmm. Exactly right. And that's where this FTE safe harbor is so great with this program, because they're just looking at full-time equivalents and the amount of money that you've paid. And you can spread it out over different people. You can pay people more now than you did in the past. Previous webinars, we talked about owners doing that and paying yourself more as hazard pay, or just for all of the added time and hours that we've all had to spend as a result of this pandemic. So all of those are justifiable and allowed. So a few other things that were clarified with this PPP forgiveness application is that the lease of personal property, autos, copier machines, let's say, maybe you've got a big server that you're renting, any of those leases can all be included with your rent payment. So that 25% that's separate from your payroll expenses that you can fund, that can include any kind of personal property leases that you have. They also clarified that all utility expenses, including transportation, so any gas that you have for company vehicles, auto expenses, car repairs, as well as electricity, gas, water, telephone, internet, all of that can be included in your expenses. Also, you need to have the documentation, though, for those. So in addition to the payroll costs and rent, you need to have that mortgage and utility expenses as well. Now, this is one very interesting thing that I realized. One of the documents that you need to submit is your 941 form. Well, as you probably know, your 941 form is filed every quarter. So for example, right now we're in the second quarter, and this second quarter will end at the end of June. So if you're filing for a time period now, you're going to have to wait until you have that 941 prepared, which you can only do at the end of the quarter. So you're going to have to wait until June 30th to when you have that 941. However, if your 8-week period runs past June 30th, then, which means I did the math, if you received your money after May 5th, then your 8-week period is going to extend beyond June 30th. And if it does, then it means that you have to wait for your third quarter payroll 941 report, which won't be ready until that third quarter is over, which is the end of September. So you won't be able to submit your forgiveness application until October, even though your 8-week period was up in July. Now, this is still
this comes under, are you kidding me?
Right?
Are you kidding me?
Right.
Now, what if they put a deadline and says you have to submit within 60 days? How does that work?
Right. So I actually asked on the webinar that I participated on this week, I asked that question, and they were kind of thrown by it. They're like, wow, yeah, we didn't really think about that. One of the presenters said, I think that there's, if you're using a payroll preparation service, you should be able to get around that. They can give you kind of a preliminary report and somehow be able to like have a draft of the 941. But
so what you're saying is not wait. You're saying not wait for the 941. Just use the payroll information you've got and say, right, this is in lieu of the 941.
Right. Exactly. So, which is a good segue into my next one, which is this is my take now. After all of this information that I've done, this is my take. The first thing is, unless you like doing your own taxes, or unless you do your taxes yourself and you're one of those few people that like gets into IRS forms, you're probably going to want to have your CPA or your accountant complete this form. This is not going to be something that you're going to want to try to sit down and do. I even got contacted by a tax attorney this week who was trying to make the argument that even your CPA doesn't really understand how these work, and that there's too many interpretations that need to be done, and it's not as cut and dry as like an IRS tax form. And so this guy was really trying to make an argument. He was like, hey, I'm a tax attorney, you need to hire me. So I don't know if you need to go that far, but I think it really depends on what your situation is. Like my situation, I've got 2 employees. I have the same 2 employees that I had before. I'm paying them the same amount. My PPP is going to be very simple, and I probably am going to do it myself because it's that simple. But if you're trying to calculate full-time equivalents, if you're trying to see if you qualify for the safe harbors, if you're trying to change your 8-week look back, any of those little nuances, then I would say you definitely want to consult the professionals. Another thing is, yeah, Paul.
Since the bank loaned you the money and not the feds, right? Your bank loaned you the money, and actually of that $380 billion, they haven't spent it yet, right? It's sitting somewhere in some fund,
right?
And they're going to spend it as they forgive things. But you also have to meet your bank's requirements, right? I mean, and that's different with every bank.
Correct. And that's what my next bullet point here is, to use whatever tools or calculators that your bank and or your payroll service provides. Because Paul's exactly right. Those are the people that are going to determine your loan forgiveness. So for example, I was talking to someone this morning who got it through PayPal. I guess PayPal has their own loan forgiveness estimator tool. Another one of our clients, he's with ADP. He sent me the link to this. This is a loan forgiveness tool that ADP has. So definitely don't go and use some third-party forgiveness estimator tool. Go first to your bank and see if they have what kinds of parameters or tools or spreadsheets that they have. And then secondly, I would go to your payroll processor, whether it's ADP or Paychex, and use whatever they have. But use those worksheets, because they are the people that are going to be determining whether your loan is forgiven or not.
Now, question: can your bank require other stuff if they want to? They can require whatever they want, right?
No. It's based on, now that they have this formal 11-page loan forgiveness form, everyone is instructed to use the same form. And in the form, no, they can't. And in those 7 pages of directions, there are very clearly what documents that you need to support. So I take that back. I mean, I can't say no for sure. I mean, I guess this is still up for interpretation, but I can't see why any bank would add requirements. Yeah.
And there's also that they have something come from the Senate they may pass in the next week or so, which is going to change all the rules and say that you may have longer to do that, right? So all the rules could change in a week.
Yeah, exactly. Yeah. So the last takeaway here, and this is really important, we were talking to one of our clients about this week. They've made it clear that the forgiven PPP funds are not taxable, at least from a federal standpoint. Now, it sounds like, typically if there's any kind of loan forgiveness, that's considered as income. Well, the feds have made it very clear that any loan forgiveness is not going to be treated as income. You might, however, be treated that way by the state. And the important thing to understand is, while it's not treated as income, you can no longer deduct those expenses that were paid with those forgiven loans. So what's going to happen is your write-offs for your payroll expenses and your auto expenses and rent, all of that is not going to be a write-off this year. So indirectly, you are being
taxable. Right. So if you got 100,000 and you normally wrote that 100,000 off in payroll, but you can't write it off because you got the PPP loan, then you have 100,000 income, right? And you're going to get taxed on that 100,000.
Yeah, exactly.
So what does that
that's another reason, right? Yeah. So that's another reason that you want to work with your CPA and really kind of put a strategy together, because you don't want to have a surprise at the end of the year and thinking, oh, well, I got 200,000 in the PPP loan, and that's not going to be taxable. Well, no, it's not. But the 200,000 of expenses that you paid with that is no longer deductible. So in effect, it is taxable.
It is taxable. Yeah.
Okay, so I want to move on to the EIDL loan now, because we've got some interesting developments on that end as well. But before we do, David, are there any more questions on the PPP that we can address?
Well, there's a gentleman who would like to talk about the 75% forgiveness issue if you didn't hit the 75%. And I was just going to sit on that till we were done. I think he wants to comment that if you don't hit the 75%, how do you then address what will be the forgiveness guidelines?
Right. So that's one of the more complex things, which actually is covered in this form, but it's a percentage calculation. So it's not an all or nothing, right? If you don't make the 75%, then there's a certain portion, and there's a calculation in the forms that figures out, okay, well, if you made, if you got 90% of the way there, then 90% of your funds is forgiven. And I'm kind of simplifying it, but you have to go through the math and the forms and the schedules in that forgiveness form to be able to calculate how much of that, what percentage of it will be forgiven.
If we had some time, he said he could comment on his experience.
Oh,
so
okay.
Okay. So go ahead
and
bring up the EIDL and
okay.
We're hitting our half-hour mark, but
yep.
For those that want to stay, we always try to answer any remaining questions.
Right. And we're gonna wait on our marketing things we said we were gonna cover this week. Obviously, last week we didn't know this forgiveness application was coming out, so we're gonna wait, and we will do that. Next time. Okay. So the good news and the bad news on the EIDL. Paul and I are perfect case subjects here.
Yeah, this is great. This makes total sense, right?
Right. So Paul and I both
I
applied for the EIDL at the same time, right,
Paul?
Paul?
We're in the same business. We're in the same business. We're both consultants, the same business, relatively the same income, pretty much the same, right? So
right, exactly.
I got a notice back that said, you have been denied because your business is not negatively affected enough by the coronavirus to apply.
Right.
And
so Paul got the top half of this screen. He got the bad news, and I got the bottom half of the screen, the good news. Literally within a day of each other, we both got these emails, and it's just, we still don't know why and how I qualified and Paul didn't. So
let's say it's fairly arbitrary at best, right?
Right, exactly. So anyway, so I said, okay, well, so I clicked on create account, and boom, it took me to this website. And I basically just had to create an account, and I put in my email and I put in my password, and lo and behold, up popped this screen. So I'm telling you, it looks like I'm applying for a credit card. I mean, this thing was so kind of user-friendly. This is not what I expected to see from the SBA, but there it is, my quote. So I qualified for $78,900. I have no idea how they calculated that. I went back and looked on my application. It has no correlation at all with the amount of money that I showed with anything that was related to it. So somehow they just calculated that I qualified for $78,900. Now remember that in the past, they were originally, these loans could be up to $2 million. But in the last couple of weeks now, they've changed it and they capped it at $150,000. So for whatever reason, they decided that I only qualified for $78,900. But it's interesting because once you click right here where it says review and accept the amount, it takes you to this screen where you literally have this sliding bar, and you can slide this bar back and forth to any amount that you want to borrow. And then these numbers down here change based on, if I slid this down to 50,000, then my payment amount changes. So I was very impressed with the way that this works. So for those that don't know the terms, here's the deal. It's a 30-year loan. It's at 3.75%, which again isn't nearly as good as the PPP loan, which is only at 1%. I mean, my home equity line of credit is less than 3.75%, and I can write that off. So the payment you pay is monthly. You don't have to start repaying it until 12 months after the closing. And the only fee is a $100 third-party filing fee. So if I was to apply for the full $78,900, that would be my payment per month, would be $385. And then once you hit, go ahead, Paul.
Are there any prepayment penalties if you do this? And my understanding is the first year is interest-free, and they won't charge you that interest. You basically get the money for free for a year. So could you take it free for a year, and at the end of the year, pay it off? to get a year's worth of free money?
Repay, I think you don't have to pay anything in the first 12 months, like it says down here. Repayments start 12 months after closing, but I do believe that the interest is accruing. So I don't think it's interest free. I think it's payment free for the first 12 months, but I'm not sure that it's interest free.
Okay.
So, all right. And then once you select the accept thing, then you basically you go through the rest of the steps, which is that you verify identity. It asks you a couple of questions, like typically you've probably seen, like, you know, which of these 3 streets have you lived on in the last 20 years? You know, which of these schools did you attend? They're just basically verifying your identity. And then the electronic disbursement, they're just verifying your bank routing number and your checking account number. And then you sign the closing documents, which I haven't started yet because I didn't want to get there yet. But and then that's it. And that's pretty simple with the EIDL. So I guess the good news is that the EIDL money is still coming. It is still flowing. And it's a fairly simple process. The bad news is that who qualifies and who doesn't qualify seems to be somewhat arbitrary, at least from Paul and my experience. And from my experience, the amount of money that you qualify for also seems to be fairly arbitrary. So there's a little bit of a luck of the draw there, and whether you qualify, and if you do qualify, for how much money. But if you applied for that original $10,000 EIDL, that's what Paul and I did. And as you know, when you applied, you thought you were going to get 10,000, and then of course they changed the rules on that as well, and so that it was only paid per employee. Now, Paul, you got that money, didn't you?
No, I never did.
Oh, you never got that either. Oh,
I did get the PPP money though.
Right. Okay. So I did get the $2,000 for my 2 employees. So maybe that's an indication. So if you got that initial money up front, the $1,000 per employee, I think that, don't quote me on it, but my guess is that you're probably going to be getting an email like what I got, asking you or allowing you to sign up for the application. So let me just do a quick show of hands. Has anyone else gotten this EIDL application like I received this week? I don't see anyone. Wow.
You're the winner so far, Ed. Yeah.
Yeah. Oh, maybe looks like Kent. We got one, Kent. Okay.
Yeah.
So I applied, obviously I'm on top of this stuff because we've been doing these webinars. I applied back in March. So I don't remember the exact date, but oh yeah, March 31st. So I applied March 31st. So for any of you that applied after that in April, my guess is that you're still in the list and it should still be coming. So
you'd made a quick comment. You made a quick comment, Ed, about auto expenses, and so one of the questions is, I saw nothing indicating auto expenses are part of utilities. You'd mentioned it just in your side comment about 10 minutes ago. Yeah. So is it auto expenses or is it just payroll, interest, lease, and utilities?
You know, I took some of these, as I was preparing these slides, I took some of the information from some of the articles that I was reading, not just from the PPP application form. I'm thinking that may have been from one of the articles. And, you know, the articles are not always accurate. So if it doesn't say auto expenses on the form, then I apologize, but maybe it was false information I got from a magazine article. So, all right. Any other questions?
Once we hit the dollar amount of forgiveness based on payroll that was loaned during our payroll records, does it make any sense to even include any leased property or gas receipts? You know, he's exceeded the 75%.
Oh, yeah. If he's, yeah. I mean, obviously, you only need to again, so let's be clear. So the 75% is for the payroll, right? And then the other 25% is for expenses. Let's be clear about this. The 25% for the other expenses can be less. For example, I'm probably not going to submit any other expenses because I can cover 100% of my payroll because I'm giving some bonuses out for the bonuses that we've talked about. So If you can cover 100% of your loan amount without any expenses, that's fine. You don't have to have that 25% of other expenses. But that other expense amount cannot exceed 25%. But it doesn't have to be 25%.
So Ed, if you don't get, let's say, you have to justify with receipts or whatever the heck it is, that other 25%, or if you meet the 75%, they'll just forgive the whole thing.
Right. Right.
Yeah. So even if I make the 75%, and the other 25%, I have to justify with receipts or whatever. I just can't. I don't get it automatically.
Correct. You don't get it automatically. You absolutely have to provide receipts and documentation of that for sure. Yeah.
Okay. A couple more questions. If a company received the PPP money, can the loan amount simply be returned without documentation? Wasn't there a return period?
There was, and it ended last week. But that, my understanding, was for people that did not want to use any of the money. If you only want to use part of it, that's a very good question. I don't know, and that's a great question. Let's say you borrowed $100,000 and now you only qualify for $80,000 of it. Can you get that $80,000 forgiven and just pay back the other $20,000 without any penalties? That's a really good question, and I don't know the answer to that. I'll try to find that out between now and next week.
And then we had a follow-up. I read, this is from a gentleman, Ernie, if you don't take 75% toward payroll, that none of it will be forgiven. And it was my understanding, like yours, Ed, that there's some kind of prorated formula, but we don't know for sure, do we?
Yeah, and that's in the application forms. I'm pretty sure it's prorated. Everything that I've read and heard, it's not all or nothing. It's incremental. So, if you got a certain, you got close to the 75%, then you could cover a percentage of it.
Yeah.
Yeah. So, all right. Well, obviously we didn't get through our marketing stuff. Just to give you a little preview, next week we're going to be talking about 4 approaches to expanding your market share and how to do that with marketing. Last week we talked about, started that subject, and but this week we really wanted to make sure and cover all of the PPP questions on that loan forgiveness form. So if you have any questions, please call us or email us. I'm going to put our contact information up here again. Several of you have reached out to us with emails or phone calls. We always make sure to get back to everyone. So if you have any questions, please contact us. And again, we will be back again next Friday, same time, 11 a.m. Pacific, at 2 p.m. Eastern. We'll have updates on any additional information that comes out regarding the PPP forgiveness application. And we'll really get back into the meat of really trying to help you guys to improve and increase your market share in what is sure to be a declining market here for the next several months. All right. So thank you all for your time, and we'll look forward to seeing you next week.
Thank you all. Have a good week. Enjoy your holiday.
Enjoy your holiday. See you next week.